All right. Good afternoon, everybody. Welcome to week 8, all right, of our 12 weeks of mentorship with Adetola Freeman. Unfortunately, it appears that this is going to be the very last session that we're going to be having together in the course of this series. All right. Owing to the fact that there are some other pressing things that I need to attend to, all right, as well as the fact that I have my birthday coming up very soon, and I would like to spend some time, just preparing for that. All right, I would like to spend some time preparing for that. So with that said, all right, it's important that I also notify you guys that, you know, there's a great deal of stuff that we have prepared for the month. We're working towards a system where you guys are going to be able to, accurately trade the markets, all right, without necessarily requiring support. Okay, let me rephrase. What I mean is that based on my observation, all right, it's quite evident that not a lot of people want to take the time to, learn from scratch what it takes to, trade the financial markets profitably. All right, and that's fine. Not a lot of people have that patience, and that's okay. All right, and that's why myself and my team, we're currently putting together it's a kind of system, all right, a software that helps you guys analyze the markets, all right, and basically tells you when it's safe, all right, to either buy or sell. All right, so that system will be responsible for notifying you, all right, when it's safe to buy or sell, sending signals and all sorts, either on your phone or directly to a Telegram community that you guys have set up. All right. So thank you so much, Lucky Fingers and Sumba. All right. Thank you so much for the comments. Thank you for wishing me a happy birthday in advance. All right. So that's basically it. So today is a session where I'm gonna try my best to show you guys one of my best kept secrets when it comes to trading. All right. One of my best kept secrets when it comes to trading using pure price action. All right. If peradventure, maybe you're on this call right now or you're on this stream right now and you're probably a fund manager, an hedge fund trader, or you are probably someone who trades for investors. All right. This system that I'm about to show you is a system that over the last couple of years I have used in managing customers' funds, all right, clients' funds with absolute, minimal risk, absolutely minimal risk. Fantastic results, all right, especially if you know what you're doing, and absolutely minimal risk. And this is one of my best kept secrets. It's not something that I share a lot. And in fact, one of the reasons why I don't share it a lot is because it's a swing trading system, all right? And because it's a swing trading system, not a lot of people have the patience, to follow through with it. A lot of people are already tired after, waiting for a trade idea to, present itself after the first maybe couple of weeks, couple of hours, all right? For someone like me, I can practically wait for months, all right, before my optimal trade setup comes to play. And once it does, there's this guarantee that I have, all right, that tells me that no matter what happens, I am at least going to be 80% accurate in my trades. All right. So before I go into that, I want to be sure that you guys are excited to find out what this is. All right. So if you're excited to learn what this secret of mine is, I need you to just drop emojis in the comment section. All right. Just drop emojis. Drop emojis. I want to be able to ensure that we're all following through. All right. And you guys can hear me and I can get your feedback as well. All right. Beautiful, beautiful, beautiful. Thank you guys. So this is where we're going to be starting today. All right, and it's something that I've taught a couple of times on my streams. My streams with FBS, that is. All right, talking about entry confirmation techniques. All right, so what I do personally, and I'm going to show you how you can apply it, probably if you're an intraday trader or something. But this is what I do. I generally want to go to the weekly time frame. All right, that's typically where majority of my analysis stem from. Okay, let's see if we can do Euro card. You want to go to the weekly time frame. Let me take off all these indicators because it's a pure price action strategy or a pure price action setup. So when I come to the weekly time frame, what I want to see is I want to see the most recent break of structure. Which I believe we can all see happened here. All right. Now, if this was the point where the most recent break of structure occurred, it simply tells me that the demand zone that pushed price to break above that high is going to be located somewhere down here. All right. Sometimes you might be fortunate to probably get a trend line, all right, to support your position. Many times you probably will not. So let me just mark out the demand zone that I think it would be. You can also use your Fibonacci to mark out important levels. So now, this has shown me that overall, we are in an uptrend, all right? We're expecting bullish price movements, okay? But currently, we expect price to get all the way down here, all right, around the 76.4, before we can say that this bearish retracement has ended, all right, and we're looking for bullish opportunities. All right, are you guys with me? So with that said, the next thing you want to do is, this already showed us on the weekly time frame that we're expecting bearish price action before we can start to look for bullish entries. Then I go to the 1 hour time frame. So what I'm simply going to be looking for on the 1 hour time frame is an entry confirmation technique in favor of the bearish trend. All right, and how does that present itself? I really wish I had a pen or something. It would make this drawing a lot easier. So I call one of them the double break of structure approach. All right, the first one is called the double break of structure approach. And the reason why is because you can see that we had an initial break of structure here. All right, from this downward swing or that downward impulse. Then we had a small retracement and then a second break of structure. Right here. All right, so this is a double break of structure 1, 2. And usually or typically when that happens, I just expect that price will retest the 76 or 88% of the Fibonacci retracement, all right, in order to present an entry. And as you can see, in this case, our entry will be around the 88%. Can you guys see that, please? Kindly react in the comment section. Let me be sure that you guys can see that. Are you following me, please? Good. So coming to the chart, I am simply looking for double break of structure opportunities, all right, that I can seize in order to be able to follow the downward movement of price. So let me see, where was that? Of course, the second entry confirmation is called the break of structure, break of trend line, all right, which I've demonstrated countless times already on sessions like this. Let me scroll this back a bit so we can see. All right. So around this area, you can see that we had a double break of structure kind of form. All right. Price broke structure here. All right. Did the first break, then did the second break. All right. And typically when that happens, I want to use my other block, all right, which in this case is a supply zone, for my entry. Can you see what happened when price got back there? Can you guys see what happened when price got back there? We got our first opportunity. Now, from this point, this particular point right here, hold on, let me see. I should have utility here for, oh no. Let me see. Sorry, please hold on. I'm trying to see. There's a tool I have here for marking risk to reward ratio. Yeah. All right, don't let me stress you guys with that right now. But you can see how many pips this entry produced. All right, entering from here, you'd have had close to about, yep, that's about 280 pips. All right, on Euro card. Very simple, very direct, very demure. All right. Now, if we scroll further, you'll see that when this reaction occurred from that supply zone, all right, you'll see that this was the previous low. All right, that was the previous low that pushed price into the supply zone. And you see that price broke it. All right, one. And then we got another break of structure. Two. Meaning what? Meaning that we now have another supply zone that we expect price to react from, which is this. All right, which is this. And what do you notice? Price tested that supply zone again. And what happened? A major drop. Are you following me? And as if that was not enough, we saw again that this was the previous low that pushed prices up. All right, pushed prices into that supply zone. Can you see? Price pushed from here into the supply zone, liquidated this previous high. All right, so this was our first break of structure. All right, then if you look closely, you see that we got a second break of structure around here. And what do? We mark our supply zone again. And what do you see? We got another very solid entry. And that would have given you about probably 1:10, 1:12, or 1:13. Okay? And in this case, remember that on the weekly time frame, we already saw that the overall target of price, all right, where price is actually going from what we saw on the weekly time frame is this region down here. Which means that by the time price gets there, at least your first trade would have made 445 pips. All right. And your most recent trade, all right, or your most recent entry would have given you, let me see. Yeah, 410 pips. So guys, tell me, how cool is this? How beautiful is this? Let me know, does it make sense? Which means that peradventure, if you're trading probably a prop firm or something, all right, with just that single entry, all right, you are guaranteed to have gotten more than 10% of your account from a single trade. And the best part about it is you can even layer your entries over time. All right, you can continue to layer your entries over time, however you choose, all right, minimizing your risk and just scaling your positions gradually. Which means all in all, in total, you can get as much as maybe 1:30, 1:35 from just that single trade idea. Now, the reason why I said that this strategy is exceptionally good for maybe fund managers, hedge fund traders, or, you know, corporate or professional traders is because when you're managing large funds, all right, or large equities, okay, when you're managing funds like that, you want to ensure to the best of your ability that you are not taking more trades than necessary. All right, you want to ensure that you minimize the number of positions you take. All right, you're taking just a few trades. All right, but those few trades are high probability opportunities or high probability trades. So probably instead of a retail trader taking maybe 15, 20 trades in a month, all right, you'll see that an hedge fund trader or hedge fund trader can typically take maybe 2, 3 trades in 1 month, and they are fine. Sometimes they don't even take any trade in a month. All right, and they are still fine. Do you guys get it now? So for me, that is one of my best kept secrets. All right, placing trades from the weekly time frame. And remember, our optimal entry is still going to be when price gets into this demand zone. That's when we'll be able to take our buy trade that will most likely return us all the way back up here. All right, so you can imagine how massive this kind of approach to trading is. All right, and you can picture how much benefit this can do to your trading. Are you with me, guys? So ultimately, see, the idea is not to be a trader that takes so many trades with 50% accuracy. All right, for me, the idea has always been take a few trades, all right, with about 80 to 90% accuracy. That works a lot better for me, all right, than taking maybe 200, 300 trades in 1 month. Do you guys get it? Let me know in the comment section if this is clear, please. Let me know if it's clear. Let me know if it's clear. So let's go on. Peradventure, all right, if you want to be able to probably scale this down a little bit, all right, you might want to do, you know, currently I do weekly time frame and then 1 hour, 4 hours time frame. All right, but if you want to be able to, you know, probably scale it a bit better, all right, there are two options. The first option is going to be using your daily time frame, all right. In fact, hold on, let me show you something I just saw on Eurocard. If this is Eurocard right now, you can see we had a break, right, and a second break of structure, meaning that price could very much return to this region. All right, for an entry. And if price does that, it would mean that we would have a very, very clear and unbiased opportunity for a very good sell, all right, for one more sell entry. So let's see how Eurocard plays. If it comes into this region, we can definitely sell all the way back down, since we know that our weekly time frame target has not yet been met. Do you guys get it? So currently, since I use weekly time frame in combination with the 1 hour time frame, for you guys, you can do daily time frame compared, and then use maybe your 1 hour or your 30 minutes for your entry. All right. So that should give you, a bit more consistent entries or a bit more opportunities compared to working with a weekly time frame. The reason why I stay with the weekly time frame is because for me, it's a lot safer. All right. And because it's safer, it gives me an avenue to be able to do other things with my week. All right. Do other things productively without having to pursue the market around or chase around and find out, oh, what's going on here? What's this? What's that? You understand? Stuff like that. Are you with me, guys? So it all revolves, or it all boils down to your risk appetite. All right. How comfortable are you with, managing risk? All right. Do you prefer to manage risk, or do you prefer to go all out? All of these are things that will determine what exactly your expression is going to be in applying this trading approach. All right. Are you guys with me? So that is the trade. All right, that's the approach. I can show you on a couple more commodities. Let's say we do. All right, just type one commodity in the chat box. I'm only going to address one, and then I'm going to show you how this would have worked if I wanted to analyze it for entries. Just type one particular commodity in the chat box, and then we'll take a look at it using my approach. Let me have your comments in the chat box. Let me have your comments in the chat box. What commodity do you guys want me to analyze using this system? Remember, it is pure price action, no indicators involved whatsoever. But of course, for those who prefer to use indicators, that is why I created IPPS, all right, which is Intraday Profits Pro System. All right, Intraday Profits Pro System. And currently, IPPS is one strategy that, as a firm now, all right, as an academy, all of my team, we're teaching that particular strategy for just $50 right now. All right, it's a discount offer all through the month of November because of my birthday situation and all. All right, so if you are more of an indicator trader, IPPS is your best bet. All right, but if you prefer pure price action, probably you will like your charts looking all sleek and sexy. All right, this is the approach that I personally use and I am recommending. And of course, please know that this particular recording or this particular session is not going to be made public after November. All right, once November ends, this particular video is going to be made, it's going to be deleted from this YouTube channel completely. All right, so guys, let me hear you. What commodity do you want me to just analyze and break down for you using this approach? You have 30 seconds. $20 seconds. And if after 30 seconds no commodity is named, then that would mean that we'll just wrap up the session for today and call it a day. $15 seconds. All right, let's see. 10 seconds more. Okay, and I think that is it. So basically, I want to believe that you guys have seen the approach, you've seen the strategy. All right, that's typically how I approach it. All right, and since basically there are no questions from you guys watching, all right, like I said, we're going to call it a night. Caleb, your answer is a bit late to Euro GBP. All right, let's do Euro GBP, all right, and then we'll call it a day. Euro GBP, yeah. All right, Euro GBP weekly time frame. Let me go to my clean chart. Now, what do I want to do on Euro GBP? You can see that was a previous major low that was swept. All right. Hold on. Let me duplicate this. Okay. So let's zoom in. I think we have a considerable demand zone here. All right. So for me, I think Euro GBP is still quite bearish. All right, I've shown you guys the target. But if you come to the weekly time frame and you check where that bearish movement began from, you see that this was a low. All right. This low got broken. All right, and immediately that low got broken, price came back to the supply zone that initiated that break. All right, which is this. And from that region, if you go to the 1 hour time frame, you would see either a double break of structure. All right, is either you see a double break of structure or you will find a break of structure, break of trend line. Yeah, so here we are. All right. Price was pushed to break above this previous high. And that push came from this low here. So you see that that first low was broken. And this became our second break of structure, which concluded our double break of structure, giving us this as a supply zone. All right, and you see what happened thereafter, a heavy drop. All right, can you guys see that? And then when we got another double break of structure here, rather. All right, so I think that price would most likely have come for a retest around here. Beautiful. So this is our second entry. This would have been our second entry. All right, and when that happened, I think we also got a double break of structure here. All right, but price has not yet retested that region. So you discover that on the daily time frame, you'd have had your first entry from here, all right, around here, which would have been, let me see, yeah, 455 pips. And then the second entry from here, which would have been, yeah, 400 pips, all right, on Euro GBP. And all of this is simply coming, with a lot of accuracy because you are not jumping into a trade, all right? You're finding very clear, triggers for your entry, extremely clear triggers for your entry, all right? And that's the beauty about it. So as far as I'm concerned, Euro GBP is still quite bearish, all right? And that is until we get to this region, all right, of this box, which I think is around 0.82752. So when price gets there, we check on the 1 hour time frame if we have a very clear double break of structure or a break of structure, break of trend line, and that would be the trigger for whether or not we stay with the buys. Is that clear, guys? Euro GBP, is that clear? All right, beautiful. So we're going to wrap up here. All right, it's been an amazing day with you guys. Thank you so much for your time. Remember, you have this video to return to probably for the next 2-3 weeks. All right, so if there's anything you're not clear about, you can always come back to revisit this video. All right, it's still going to be here till around middle of November. All right. So I think with that said, I want to say a big thank you to you guys for joining me on today's session. All right, it's been an absolute pleasure hosting you guys, and I'm sure by now you guys already know the name, Adetola Freeman. Thank you so much for joining me, guys. God bless you. Have a fantastic rest of the trading week. Bye-bye.